it's a $2 trillion asset, $900 trillion of global assets. So let's talk through that. When you have institutions that are coming in and they see Bitcoin as a separate allocation in their portfolio, that's an important allocation. The smart institutions are starting to realize that the allocations to Bitcoin not only enhance their returns, but they enhance their risk-adjusted returns. That means it makes their Sharpe ratio better. When you include Bitcoin in a larger portfolio, it enhances your Sharpe ratio. That blows their mind. And when they see that, they realize that this is an asset class they need to start allocating to. Now, we can go all the way up the top level and say, well, why is it important to have sound money like this? And sound money that's different than gold. Well, we've seen a lot of problems with the manipulation of gold, especially recently. You own gold in a vault in London, and even if it's held by the Bank of England, you may not be able to get access to that for months. And that's just insane. Bitcoin you get access to in 10 minutes. You have not only can you get access to it, but you can move it for a fraction of the cost. I mean, think about how much money it costs to move gold. Nothing against gold, but let's talk about the future. Digital currency, digital assets. And so when you have investors that realize that, my God, I can move $1 billion of Bitcoin in 10 minutes or less for just a few dollars, as opposed to $1 billion of gold, how long it's going to take to get that out of the vaults of Bank of England, get it on trucks with armored vehicles and guards, get it onto a ship or a plane or wherever it has to go to get over to Switzerland or wherever they want to put it. Suddenly, you're trying to bring that back to New York. That's a big undertaking. Okay. So with Bitcoin, it's done like that. And it's all verified. You don't have to go in and see if it's just gold-plated nickel. Like, it's there. Okay, so that's really important. And investors are coming into this realizing, okay, you've got this asset class that's growing. It's gaining traction. It's being talked about in DC. You have Bitcoin spot ETFs that were launched last year at this time, 1 year ago. And they're the fastest growing ETFs in the history of ETFs. It's just not even close. It's actually laughable looking at them. The BlackRock's ETF IBIT gained over $50 billion in less than a year. So it's mind blowing. And then, Fidelity gained another 20 billion. So between all 11 or 12 of them, there's just a massive amount of demand for these things. Why is that? Because it's easier for institutions to buy them. It takes away all the operational hurdles. That's one big part. When you look at the total assets, though, and you look at how much money is just in cash, $120 trillion in cash, or $300 trillion in bonds, $330 trillion in real estate. Bitcoin right now, up to this point, has only been taking market share really from equities, risk assets, and a little bit from gold, But as it gains traction and widespread adoption as its individual class of asset, that's much like gold, but an upgrade, like we just talked about. Well, then people are starting to realize that, oh my God, the Fed just lowered rates by a full percentage point, and the 10-year went up by a full percentage point. Why is that? Well, because inflation might run hot. Flash forward just 5 or 6 weeks later, and sure enough, you've had two prints that are come in pretty hot between the CPI and now the producer price index, where people are realizing, oh my God, we might have inflation flare back up here. So I need higher interest on my bonds to get a real return on those. I've got to protect my money somewhere. And so you will start to see, as we just get a deluge of additional treasuries being issued here and floated by the U.S. Treasury to just keep printing, to keep filling those deficit holes, regardless of how well Doge does. You're not going to clear that deficit. Let's just get real. It's not happening. It's just mathematically not possible where we are. Okay? So I'm glad that we're doing that. I'm in full support of it. But let's just get real here. We were running such large deficits that's not going to solve itself in a year. Not going to solve itself in 4 years, in my opinion. So people are going to start to realize, I've got to protect my capital somewhere. where is the capital going to be reallocated from? It's going to be reallocated from bonds and real estate because it's easy to manage your holding of Bitcoin. You don't have any tenants. You don't have a management company. You don't have taxes on it. You buy it, hold it, put it there, and it just holds its value against the depreciation of the US dollar. The dollar is being devalued to manage all that debt. We know it. It's reality. Everybody in the Bitcoin space is becoming clear about this. And people in my industry, in the traditional investment industry, are waking up to this. And so where's the money going to come from? It's going to come from bonds and real estate. And when those start getting allocated over, just think about that. That's over $600 trillion of value in the world right now, Nico. If you just get just a fraction of that into Bitcoin, Bitcoin doubles, triples, quadruples overnight. We talk about having the strategic reserve. If that happens, well, now you've got game theory. You've got all the other sovereigns that feel like they've got to own some too. So I full agreement with David that, yeah, if you just hold everything constant, if you don't keep expanding the money supply, then Bitcoin will probably continue this adoption like this. But if you continue to expand the money supply, which we believe that it's just no way around that, and you now have a different structural adoption change, like it's a sea change of adoption in the investment world of this new asset. It becomes something that will break from those models. I know that Michael Saylor likes to say all your models will be broken, really talking about hyper Bitcoinization. I don't think we even need that for it to break through some of these. So that's kind of, but the models are important. It helps us manage risk, and they're self-fulfilling prophecies. People closely watch these and monitor them, and they trade around them. So it gives us opportunity to move in and out of positions and risk management strategies while we watch those. So they are important, but in the end, I believe that Bitcoin's adoption starts eating into those other asset classes, and it goes from a 2 trillion asset to a 20, 30, $40 trillion asset eventually.
Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledn has been the trusted choice for Bitcoin-backed lending with transparency, security, and trust at their core. I absolutely love these guys, and I personally not only have an account with them, but also a loan. And some of the key features that I love about Ledn is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially what they do is that they help their clients unlock the liquidity of their BTC, allowing you to HODL while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you today. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Head over to ledn.io today.